All right, joining me is Sal Gilbertie, CEO of Teucrium, who just last week they launched the first BNB ETF here in the US, the first BNB ETF. It's the Teucrium XETF's 2 times long daily BNB ETF. The ticker symbol is XBNB, very nice ticker. And this ETF obviously provides 2 times leverage exposure to the daily price movements of BNB, which is one of the largest crypto assets in the world. Now, in addition to that ETF, Teucrium also offers a 2 times long daily XRP ETF, ticker XXRP, that launched in April of last year and has about $130 million in assets. And then I should note that Teucrium also serves as the advisor on a number of 21 shares crypto ETFs, including the first hyperliquid ETF in the US. Now, outside of crypto, Teucrium has long been a provider of commodity-based ETFs. So think about ETFs holding wheat futures and corn futures, soybeans, about $1 billion in assets overall. But we are going to focus on the crypto ETFs, and Sal is now joining me from Connecticut. Sal, it is always so great to see you. Welcome back to the podcast.
Thanks, Nate. It's always great to see you, and thank you for what you do for the ETF industry. Truly, you're a legend. You're a legend.
Well, I appreciate that. And look, you're becoming a legend yourself because you previously launched the first XRP ETF in the US, the one that I just mentioned, and you have now launched the first BNB ETF. And so to start, I'd love to hear the thought process behind pursuing a BNB ETF. Why did you target that particular crypto asset?
Sure. Well, we actually were approached by Johnny Wu at XETFs, and so this is a joint venture with Johnny and us. And of course, he's had his own very successful history in ETF land, and he brought up to us that BNB was something that would be coming to the United States. As many people know, it's the token that's on Binance. And you can't use Binance if you're in the United States, is my understanding. And that may be changing now. I'm not completely up to date on that. But it is the largest trading platform in the world for crypto by volume. And so the native token to that platform is going to be something that's appealing. And so, that's why it was chosen. To come in with a levered ETF is actually easier and faster than to come in with the ETF that actually holds the token itself. And I think we're going to get into that later, is my guess, given I'm talking to Nate. So this was the first launch. It gives people 2x exposure, which is very different than 1x, and we can talk about that. But yeah, it's great to be first. In order to be successful in ETF land, you have to be first. And it's one of the more significant crypto assets out there. So it should be represented in a variety of ways.
Okay, so you mentioned the Binance platform. For people unfamiliar with BNB, just go into a little bit more detail. How do you like to describe that token?
Well, BNB is the native token to Binance, which, as I said earlier, is the largest trading platform by volume in the world for crypto. And it's a very unique structure that BNB has. Without getting too into the weeds, it's naturally deflationary. So every time BNB is used on that platform, a little bit of it is burned. It has a unique feature where the lower the price goes, the more of it is burned. So it has, I'm a supply demand guy, right? You mentioned about commodities and where we come from. As supply is shrinking of something, that is generally supportive of prices over time. And so it's very appealing to me and probably to many other people around the world that you can have exposure to a token whose supply is diminishing over time. And so it's built like that intentionally. The second thing is that because it's the native token on the Binance exchange, you're encouraged to use that token to make your trades. Apparently, Binance has more active stablecoin wallets than any other platform. That's their own admission. So I can't validate it. But if that's true, and I'm assuming that it is, you're going to have a lot of use of a variety of tokens on there, but you're encouraged to use the Binance, the BNB token, because you get discounts. So a lot of people complain about the high trading fees that are on these platforms where you trade crypto. BNB is designed for you to get a discount on your trading fees, and I don't want to speak for them, but that's roughly how it works. And so, you've got a deflationary supply. You've got a mechanism where you need to use it on the world's most active crypto trading platform, and you're encouraged to use it. Okay, so the more it's used, the more it deflates, and the more value it has because people have to buy it. Okay, one would think, and so it's a very appealing asset. And further, BNB claims to have more AI agents hooked up to it for a variety of agentic programs than any other platform. Again, I can't validate that being true or not, but the point is it's extremely active. There are a lot of agents active on there, which means it's a platform that's going to grow and grow wildly with the use of AI. And so the BNB has a tremendous appeal from so many levels, a use appeals, and we really like looking at coins, especially things where we're going to be in a joint venture with somebody like we are with XETFs. We want coins that have a use case, okay, and so that's really, really important to us. And BNB certainly has a very strong use case.
You were mentioning earlier Binance's availability or lack thereof here in the U.S. And my understanding, Sal, correct me if I'm wrong, but I do believe there is some question as to whether BNB falls under the SEC's generic listing standards for spot crypto ETFs. And so I'd love to have you elaborate. Is that accurate? And then if so, obviously your ETF isn't spot, but because of that, were there any challenges in getting this through the SEC?
So I'll work backwards on that. Yes, there were challenges. Challenges like any other. While we have a much more friendly to crypto administration, the people inside the ETF, inside the SEC, who are doing their job and have been doing their job for years and years and years, still do those same jobs. So all of the hurdles that we need as ETF issuers to overcome are still there. And when you're looking at leverage products, swap-based products that have a little more complexity than a plain vanilla, say, long securities portfolio, there are hurdles you need to meet, and we did meet those, and so that's fine. In terms of accelerated listing qualifications, and BNB being an asset that would allow that, it now is because of our ETF. So the rules, as we understand them and our attorneys understand them and everyone else's attorneys understand them, are that if there is any exchange traded product of that asset, that's on a monitored exchange, an exchange that has surveillance and everything the SEC wants to see for safety, that you can then file for acceleration on your 33 Act ETFs. So, and those are the ones that hold the tokens themselves, obviously, and they're unlevered, and people are going to be, eager to buy those, as they always are with any crypto when one of those structured ETFs comes out. And so our launching this ETF just gave everyone else an opportunity, and we've not filed for one of those, but other people have, and it's given them the opportunity to now use our product, the XBNB product, as the accelerator, if you will, to move those things along. So I would expect that the normal 270 plus days that it takes to launch a physical token ETF, which is under the 33 Act, will now be accelerated.
See, that's what I was saying at the top. You're the legend here. You're paving the way for other issuers to be able to launch spot products. It'll be interesting to see. I know we had a filing or two out there in the past on a BNB ETF that obviously didn't go anywhere, but it sounds like that may change now after your ETF has come to market. Okay, so as we're talking about here, obviously your product is not spot. You mentioned swaps. Can you just explain more about how exactly XBNB is getting its exposure?
Sure. It's no different than any other 2X ETF, whether it be a stock ETF or a commodities ETF that trades 2 times exposure. You get that exposure through a swap. You don't have enough money in your fund to buy 200% of the asset. And so you go to a bank or another financial institution that is a swap dealer. And these things are all, highly regulated under what they call ISDAs. And there's all kinds of technical terms, a lot of legal work behind the scenes to do a swap. And we've got Market Vectors has an index among probably hundreds or thousands of indexes that they have. And we use the Market Vectors BNB index. All right, which look at any crypto, BNB or otherwise, is the crypto. It's the same price everywhere with a tiny little vig based on exchanges or timing. And so the Market Vectors index is the one we use, the one we point at, and we have swap trading partner who gives us a swap that gives us 2 times exposure to that mark to market. It's the price of BNB. Okay, so the market vector's BNB index is the price of BNB. We pick a time, which is either 4 p.m. or very close to 4 p.m. during the day when that's mark to market, and whatever time it is during the day. You pick a time, it's mark to market. That's when everything marks to market, and it works just like any other ETF. But the way to get 2x exposure is through a swap. We didn't invent that one. That's we just use the same package everyone else uses.
And Sal, I know I always ask you this. As a matter of fact, I ask this of any guest who is using swaps within their product, but we always have new listeners of this podcast. Do you mind just explaining what a swap is at a basic level?
Sure. Well, at a basic level, a swap is a commitment for someone to pay a rate against a settlement price, a reference price, okay? And the reference price in this case of BNB is the market vector's BNB index. And so if we buy the swap, which we do, and the price goes up, the person who sold us the swap is going to send us money, and that's how the price of the ETF appreciates, because that money goes into the fund. If it goes down, we need to send that swap partner money. And swaps are highly regulated since Dodd-Frank, so they're margined just like a futures or stock margining account. And so we do all that. They're very regulated. There is there are these legal agreements and swap agreements that are regulated by both international and U.S. law that cover these things. So it's a buy sell commitment basically, but you trade money back and forth as if you own stock on margin.
Yeah, and obviously the financial institution or whoever is providing you that swap exposure, they're appropriately hedging that exposure on their side.
Yes, that's true. We hope they all are. Yes, and margining actually now since Dodd-Frank, margining makes sure that happens, because if the other counterparty doesn't get their money, that it's same day. Now that we're going digital and DeFi, we get there are same day margin calls coming. It used to be you had 24 hours, and you still do in most cases, but same day is coming. And so, that's a very high degree of safety with money flowing back and forth. The more often the money goes back and forth to settle up your differences, the more, the less credit risk you have in being involved with a counterpart.
All right. Another question that I know I always ask you, and you were alluding to this earlier as well, but it's just around the daily reset of leveraged ETFs. Do you mind explaining the pros and cons of that as well? Again, I just want to make sure people understand how this ETF works and the type of investor experience they may receive.
Thank you, Nate. And this is really important because investors need to understand this, that any 2X product, any daily reset 2X product is designed to give you exposure the day you're trading it of 2X of the underlying, okay? And so over time, the only way these products make you money, the only way they go up is for the price of the underlying to steadily go up, okay? So in 2 or 3 market scenarios, an up market is the one scenario where these products make money. In a sideways or down market, a levered product loses money. And the reason is the daily reset. And I guess that conceptually, the way people need to understand this is that if we have 200% exposure, so we own, two BNB tokens, let's just say, to make it simple. All right. And it goes up 100%. Well, because we own 2 tokens, if the price of one goes up 100%, we own 2 tokens, you've made 200% that day, okay? But the value of the portfolio is now higher, so we have to take the extra money that we're sent and invest it so that you have 200% exposure tomorrow, all right? And so we buy more at the end of an up day, all right? If the next day it goes down, we lost more than we would have had we not bought more, okay? Because it went down, we have to sell the next day to keep that 200% exposure, because you're not allowed to have more than 200% exposure. These are very, very tight restrictions. If we go over 200% exposure, then you get into some difficulties with the regulators. And so it's a 2X fund, or as close to it as you can possibly get, subject to trading and fees and things like that. But if you're buying on the up days and selling on the down days, and it goes up one day and you buy more, and down one day the next day, Now you've lost more because you owned more relative to the day prior. You sell it and it goes up the next day. So you got a choppy market sideways, going up and down, up and down, up and down. You're literally losing every single day. So a sideways market will really hurt you if you're long a leveraged daily reset fund. A down market, obviously, you're going to get that 200% downside that day. So people need to understand there are three market scenarios broadly: up, sideways, and down. And in two of those three, you lose money owning a daily reset long only product. And so be very careful. All 2X products, all 2X long products are designed for short-term traders. These are not buy and hold products. I can't stress that enough. It says it in all the documents, but people need to hear it. I hope that's an explanation that people understands without getting, too mathy and geeky.
I think extremely well stated. And we always say these leverage products are very path dependent. I think you laid out the three scenarios very well. I guess with that as a backdrop, though, Sal, who do you see as the audience for these types of products?
It's the audience for any levered product, people who have conviction about the price. And so remember, you can sell these short if you want. So if you think it's going down, you can sell them short. But the thing is, let's just stick with the long side. It's a long product, okay? If you're convinced that short term, the underlying is going to go up, in this case BNB, because we're talking about XBNB, then this product is something you should consider. If you think it's going to go up steadily, then this product is something you consider. You're going to make more money if you're right, okay, than if you just own the unlevered product, of which there isn't one right now anyway. So you can't own it. You'd have to own the token itself. So that's what it's for, the person with conviction. The moment you think, this may start going sideways or down, you need to not own a levered product. That's just how it works with these things. So people with conviction, that's who it's targeted for.
Okay, so that's XBNB, again, first ETF offering BNB exposure in the US. I mentioned earlier that Teucrium also offers an XRP ETF, the Teucrium 2x Long Daily XRP ETF, ticker symbol XXRP, double XRP. That's now been on the market for over a year. It launched last April. It functions very similarly to everything that we just described with XBNB. But I'm curious, Sal, after having that on the market over the past year or so, do you have any big takeaways? Anything standing out to you with double XRP?
I think it went as expected, except for the launch, which was way more than we expected. I think that the pent-up interest for the XRP, the difference between XRP and any other token is that XRP army, the thing they call the XRP army. There's people so passionate about that token that money really flooded in. What we did see, I know, is that a lot of people were so eager to get exposure that they bought into, just like XBNB, it's the first ETF where you can get any sort of BNB exposure at all. And so, in terms of concentrated exposure. And so bottom line is people poured money into that, whether they wanted a levered product or not. The moment that the unlevered products came available, which wasn't too long afterward, I forget exactly when, money left the levered product. All the buy and holders who just wanted some exposure, regardless of the risk of the leverage, basically move their money into the unlevered product. So the buy and holders move to the unlevered product, and the aggressive conviction traders, high conviction traders, have stayed with the levered product. The interesting part about the products is its AUM has bounced between 100 million and a little over 500 million over time. And again, XRP itself is down, more than 60%, I think, from its highs. And so that leverage has acted, the way you would expect on that ETF. But the number of shares outstanding has gone higher, consistently higher. So there's still a really high degree of interest in the XXRP ETF. It is the number one ETF in its category. It's very heavy options volume. It's liquid all around. So, there are a lot of high conviction traders for XXRP. I would expect BNB to follow a similar pattern without the initial burst of AUM that XXRP.
I'll tell you, I'm out on X. I don't know if you traffic out there much, but nobody in the crypto space is more passionate than the XRP army. By
That's
far,
true.
in my interactions, it's unbelievable.
Yeah, no doubt.
All right. Besides the Teucrium ETFs that we've covered, I noted at the top that you were also the advisor on several 21 shares crypto ETFs, including the first hyper liquid ETF the 21 shares, 2 times long hype ETF, ticker symbol TXXH. I actually saw there was a Canton Network ETF that launched today. There's also a crypto index ETF, which holds other spot ETFs. So that's a 21 shares FTSE Crypto 10 X Bitcoin Index ETF. And there are some other ETFs as well. But I'd love to have you just maybe explain that relationship a little bit and how you're helping to support those products.
Sure. 21 Shares is a major white label client of ours. And for those not familiar with the white label business in ETFs, there are a few very large companies, very successful. If you have an idea for an ETF, you can basically outsource most of that work, and have somebody else basically launch and run your ETF for you. Now, when I started Teucrium a long time ago. So our first, corn fund launched in 2010. So we started in 2009, a year prior to that. There weren't these services. You couldn't outsource. It was kind of still a kind of bit of a frontier industry. So I built the infrastructure inside of Teucrium to create, launch, and run funds. And we've got that infrastructure there. And over the years, the phones ring and people say, I've got this idea for an ETF. Will you help me? And so that happens so many times. And then Springer Harris, our COO of Teucrium Trading, wrote a book called Get ETF. And that just caused so many people to call us and say, wow, you guys really know your stuff. Can you help us launch an ETF? And so because we have the infrastructure built out, and we certainly can't have all the good ideas, nor do we have the resources to launch, dozens or even hundreds that will come to funds. Other people come to us. They can use their resources and their ideas, and we can do the work for them. And we have a variety of, it's like a menu, depending on how involved you want to be or not. You can, we vet your ETF idea with you. We let you know what you're going to deal with to actually have an ETF and what the hurdles are. And if you still have an appetite to launch, and you think Teucrium is the right white label partner for you, you launch with us. And so I think we've got 10 or 11 funds we've launched very recently. We've got another 8 or 10 in the pipeline where we filed. More are coming. We just hired Maytal Legume from the New York Stock Exchange. She's a big hire. She had hand in, I think, over 3,000 ETF launches. So we've buffered our ETF, our white label program, to be there for all the incoming calls that we get. There's an amazing number of ETF ideas out there that are being vetted. And 21 Shares came to us. We actually were heavy users of their European XRP product at one point. And so it was natural that they call us and they said, would you help us launch some products we have ideas for here in the US? And they're a fine partner. We're launching some really good things. In fact, I think, I don't want to single out any one thing to let people make their own decisions, but I do think that the future of the crypto industry, as we get more mature, and as money managers, traditional finance money managers, as TradFi morphs into DeFi, not just for the use of the blockchain, but for people accepting cryptos in their portfolios, I think that, and you've probably heard Matt Hogan say it before, the future is indexes. If you just like you buy a stock index, you're going to want to have exposure to crypto, whatever your weighting is, to a crypto index. And we've launched 21 Shares index products, that I have very high hopes for. I think they do as well. I think that's the future of crypto investing in terms of the big money over the next 5 to 10 years.
With that white label business, which I thought you just did a fantastic job there of describing what that is for people who are unfamiliar. But as I look at the products that are under that business, there is clearly a focus on crypto at the moment. Is that just because of the relationship that you had with 21 Shares and that's how that has evolved? Or is there more to it just in terms of the focus on crypto?
I think it's both. I think the focus on crypto, what sector is ready. There are a lot of ETFs out here, right? You know better than anyone. And so I think that the hot new sector is crypto. Okay, so people have some buffer funds, they have some income funds, and those are things that are out there. The innovators, the smaller companies, or the people on the edges that are coming into ETF land, they're focused on crypto. That's the biggest chunk of new territory up for grabs. I guess it's like a land grab, right? And so I think that's why the focus on crypto. We've got a lot of funds coming out that aren't crypto funds, or a lot of ideas on the drawing board that will be filed or have been filed that are not crypto funds. And so I think it's just a momentum in the industry right now.
Have you noticed any big differences in supporting crypto related products versus TradFi ETFs? You know, I think about the wheat and the corn and the soybean futures ETFs that I mentioned that you offer. How is crypto different, if at all?
So I was speaking to Jake Hanley, our growth desk manager. So we have a growth desk that is available to our white label clients to help people market and grow. And there's more to marketing. You've got to grow, right? You can do all the marketing you want, but if you're not growing. And so Jake's come up with some unique things. And from our perspective, because of that experience, I think I could say that crypto has a lot of momentum. So it's a different type of growth plan and marketing plan for, the XRP army. That's kind of those people are they're marketing themselves. They're talking it up, and they keep track of crypto. I think that on some of these new products that are coming out, like BNB, that's not as familiar in the U.S. And that's one of the hopes that we have for BNB is there are a lot of people who just didn't think about BNB yet in the U.S., which is the largest financial market in the world, because Binance is outside of the U.S. Well, now that you have access to, a top 5 token, people are going to think about BNB. So there's a lot of hope there and momentum there. So the difference is, marketing crypto, it's more momentum. In the difference in growing a agricultural ETF, that's not really momentum. Chart watchers find it, but agricultural ETFs are used for portfolio diversification. You've got a lot of advisors. I mean, we've seen our ag ETFs this year go from, I think, around 250 million to around 700 million in AUM because of the fertilizer disruption in the high price of fertilizer because of the war, and people seeing that's a multi-year issue. And so the people that we've been for many years, since 2010, explaining to them, hey, grains need to be part of your portfolio. You really need to look at that. They're a really good proven diversifier. That's more education. So I would say that crypto is awareness marketing, momentum marketing, if you will, and I think that for agriculture and other more traditional and stable investments, that's more an education planning. People are allocating, advisors are allocating chunks of money, $1 million, $8 million, $10 million, $50 million going into the grain funds. Whereas your crypto is a little bit different, especially, your non-Bitcoin cryptos. You've got money dribbling in and out of there, $10,000 to 10 million from, say, hedge funds. But they're two totally different things. One is a true investment and allocation. That's the grains and traditional. And the other is much more momentum and what's in the news right now.
So with that momentum, is there anything you can tell us about product development at Teucrium moving forward, just in terms of what you might be looking at in the crypto space? And maybe you don't want to give away your whole playbook, but maybe you can talk about just how you're thinking about the crypto category overall. You mentioned earlier being bullish on index-based crypto ETFs. What are you looking at just at a high level?
We're looking at what is again, there have been so many filings. We're looking at where can you be first and unique. That's what's important. And it's not just for crypto. That's how we look at ETFs. To be truly successful, you've got to be first and you've got to have a great ticker. Those are absolutes that there's no compromise on. And then we look for niche markets. We're not the people who are going to be call writing on an S&P 500 income fund. There are plenty of those funds out there competing with much larger people than we are. It's just not worth it. So we're going to look for the unique opportunities that require some bespoke handling, and that's where we are. So our public filings are our public filings, Nate. I can't drop anything else out there. So we'll see what we come up with.
All right, before I let you go, if we look at the crypto space itself, and again, you were alluding to this earlier, but I think about the 2 ETFs that Teucrium offers with XRP and BNB. If I look at those 2 crypto assets, they're both down around 60% from their peaks last year. And it's clearly been a very tough environment for crypto overall. So any thoughts from you? Are you feeling good? Are you feeling bad? Are there any particular catalysts you're watching moving forward?
Sure. I'm feeling good. You never like to see things go down, but things go down. I mean, we've been around long enough where things go up, things go down. Crypto is getting less volatile. Okay, all the bigger crypto tokens are getting less volatile. We're very optimistic on introduction of the blockchain to traditional finance. I've likened it before. It's like the internet in the 90s, the build out. Okay. We're literally just getting started. A lot of talk is around the Clarity Act. Will that be passed? And that's going to be a big deal. The Clarity Act may be passed or not. If it's not, it will just slow things down. Clarity Act is appropriately named. It will make things clear. People will get more aggressive. The regulators will begin to have rules put in place. And again, even if the Clarity Act is passed, it's going to take a year. Okay, because then a law is different than a regulation, and the regulations are really what run the show. The difference is, if the Clarity Act passes, a new administration can't come in 2.5 years or whatever it is and change the rules and change the process. If Congress passes a law, the regulators can come in, make their rules that everybody knows are going to stick. And so that's the importance of the Clarity Act passing. If it doesn't pass, it's not the end of the world. So passage, I don't think, is the stimulus people think it is, because we're going to the blockchain anyway. Okay, TradFi is becoming DeFi. There's no stopping it. It'll just happen less aggressively and less fast, if you will, not as rapidly. If Clarity Act does pass, those rules and regulations will come into play over the next 12 months after the passage, and things will move along at a steadier clip. And I think that's a difference that people need to be aware of.
Well, Sal, I always enjoy visiting, and I really appreciate your ability to explain things in a way that everybody can understand. I thought you did a great job explaining swaps and leveraged ETFs, the white label business. So thank you for that. Congratulations on the new BNB ETF, and congratulations on all the success you're having with Teucrium and the white labeling offerings. I love to see it. Thank you for joining me.
Thank you, Nate. Appreciate it very much.
That was Sal Gilbertie, CEO of Teucrium. Thank you for listening to or watching Crypto Prime. As always, you can stay up to date on all of my latest guests by visiting CryptoPrimePodcast.com. See you again next week.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of investment advisory firm Nova Diaz Wealth Management. While OTR Media and Nova Diaz are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by Nova Diaz. Some guests appearing on this program may also be financial sponsors of Crypto Prime. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the possible loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.